and this is a question that I get asked, I'd be interested to see what your answer is, Andy. Why are accurate rebuild valuations important to insurance?
Two things that come to mind. One is because we've got a business that does it, and that's how we make money.
Fair enough.
Accurate rebuild valuations are important to the industry, to the whole, actually, to everything. Because if you look at insurance as a bucket or a big bowl in the middle of the table here, and we're all putting money in, we've got camera people and everybody's putting money into this, and we're saying, oh, yep, and I say, well, I'm going to make sure I'm insured properly. So I'll go out to construction cost consultants and get a rebuild valuation. And you say, well, I'm just going to guess it because I'm an ex-stonemason and an ex-builder. I know what my costs are, which we hear a lot.
Yes.
And the other two are going, well, I don't really know. I'll just use the online free calculator because it's free. So I could probably put my house on. I put my farm on, as they say here, that the three of you are going to be underinsured. So, which means you're putting less money into this pot than I am. And we've all got a similar house, say. Yeah. And we're all putting that money in, and we all have a big claim. We're all getting the same money out.
Yeah.
We're all getting the same money out, but I'm putting more in. So the insurance company's then strangled. They're losing money. So then all of our rates go up. Everybody's prices go up. And that's for a partial loss, which is probably most losses are a partial loss. And that's how we're seeing such huge increases in our insurance costs, is because people are not insured. And it is the fact of 85%, the government have told us 85% of that industry, their houses are underinsured by that. The other side of it is if it's a total loss, and I've insured my house for $1 million and you've insured it for $750, and then the other two have done $750 as well, I'm getting $1 million and I can build my $1 million home. You're going to get $750,000. What are you going to leave out? Because you're not going to be able to build the same house as you already had, and nobody else is. So that's one of the important factors in it. Nobody wants to spend money on insurance. Insurance is a grudge purchase, as I keep saying, and the problem that we've got is we're a grudge purchase. So we're telling people how much to spend on something they really don't want to have, but they feel they need to. And the amount of stuff that happens in New Zealand, the disasters and things, is really important.
Yeah, and that's residential you're talking about there. And it's my understanding that the more the insurance companies and the reinsurers understand that the risk is being covered, then they'll discount it accordingly, and the discount will go to the whole nation. And obviously there's another bunch of people out there who are also not insured, or self-insured. And then that leads to a government bailout as well, which impacts on everybody as well. So, and then there's commercial insurance, which is different. Residential, generally, 85% of people are underinsured. Whereas, as we discussed earlier on, commercial insurance seems to be the other way around. They're paying too much premium. And the fire service levy is also calculated off the IV, which ultimately sets it. So you've got a lot of commercial people out there paying way too much insurance, unnecessary insurance.
And you've got, like you said, that they're paying that's for that 50% job that we were talking about earlier, was the people are paying 50% more than the value of the property.
Yeah.
And that's commercial, and that's not uncommon at the moment in commercial. It's a real problem. And how do we get that out? How do we tell people that? And it's only you and I and our BDMs that are out there shouting from the rooftops about that at the moment.
And that claim time, they're not going to get paid that much. The amount of money they've been insured for, they're just going to get paid to replace it.
Yeah, exactly. They're going to bring somebody like our QSs in to do a valuation of it, and we'll say, it's worth half of what they are, and that's all the insurance company's going to pay them out.
I guess an example of that is what we've seen talked about before, the tornado house. And that's residential, bouncing back to residential again. But there was a classic example of essentially underinsured. A lot of emotion, caught up in red tape. Do you want to carry it on from there?
Oh, do you not know the rest of the story?
I do. I felt like I was hogging the mic a little bit. You've unleashed a bit of a monster.
The Tornado House, perfect. I mean, they were underinsured by about $250,000. They knew that after we went in.
Yeah.
And he insured it for a value that he thought it would be. And people come up with these square metre rates for houses, and we live in New Zealand, and 99% of the houses are different. You can't walk down the street and I challenge anybody to walk down the street and say that every house looks exactly the same. And we don't live in the UK where we build full estates of the same house, or every house looks the same. It's just not like that here.
And that particular client was he was intelligent and worked in the construction industry as well.
Yep.
And still didn't get the number right.
Yeah, he worked in the construction industry, but he didn't work in the number side of it. You'll find that quite funny. So yeah, it does have an effect on it. It has an effect on everybody when you're underinsured. And it is about having your property insured properly, whether you're overpaying your insurance or you're underpaying it. If you're overpaying, you're only going to get what it's worth. If you're underpaying, you're only going to get what you've underinsured it for. And then we have a issue that we had in Christchurch, and we all still talk about Christchurch, and that's 13 years ago. Yeah, 14 years ago, so 2010, 2011. So we also talk about it, and can you imagine that we had some insured when we were in Christchurch?
Yeah.
Which we didn't. It was brought in after that because of that. And if it were someone, and that was the insurers or the reinsurers going to the insurance companies going, we need to make sure that we're covered, because they just couldn't grasp the liability down there. And that's a huge issue. And if we had some insured there, people would have been out of the houses. They would have had nothing.
Yeah.
1st of July 2013, the insurance companies changed to, you had to nominate your sum insured. And they started, and they helped people in. They gave them a year's grace, and they started at default sums, which were ranging from $1,500 to $1,800. And we were sitting as QSs going, what are you building for that? You're demolishing it and rebuilding it and designing it and putting through all the processes, to council processing and things for $1,800, $1,500 a square metre. What happened with people would go to the insurer and say, hello, Mr. Insurance Company, I want to insure my house. I've got 300 square metres, and they would put it in a sum, and you would maybe say $1,000 a metre, and you would insure your house for whatever it was, and they would pay you out to rebuild it no matter what you insured it for.
Yeah.
It does seem a bit crazy now when you think about it, but that's the way it was run. So you can understand the insurance companies or the reinsurers going, we just don't want to be involved in this. So the first earthquake, September 2010, was the big one. It was 7.6, I think it was. And then the next one, which caused most of the disaster and unfortunately death, came in 2011. And that's when we get involved as QSs. And when I was in the middle of all that, was when I realised that the only people that can actually do these rebuild valuations is a QS. All these valuers were running for the hills, so to speak, because they actually don't know how to do a rebuild valuation. They phone people like you and me and ask us how much it costs to rebuild a house. Yeah. So the devastation down there that we see and we would never see again, because people will get paid. People then got paid out. And yes, I accept that there were some people who didn't get paid out, and I think there's still some people arguing over it. Yeah. However, the standard ones were coming out and jumping and taking what they could get, and they were getting a lot of money for shacks. And there was people getting not so much money for amazing looking houses. So there was no rhyme or reason for payouts happening. And that made me at the time just go, we need to actually get some numbers around this, and that's how we started doing the rebuild valuations and CCC. Yep. And that was, I set it up, or we set it up about probably January 2013, as soon as the announcement came out it was happening. And I thought that silly that in July the 1st, 2013, everybody was going to do it. And they didn't, funny enough, because nobody knew about it. And if anybody remembers the advert from IAG. IAG spent $20 million in advertising for it to change. I don't know if you remember. And they had the 2 talking letterboxes on the TV, and it was one letterbox talking about being when you get your insurance policy in, and yours will be underinsured, and you may be underinsured, and you need to nominate your own sum insured, so you need to tell us how much you want to insure it for. But when you think about that, an insurance company is not a builder. They're not a quantity surveyor. They don't build. They're in the business to insure you, not to tell you how much your stuff's worth. And we've just done some surveys at the moment with a company that we're using to do some research, as you know. Yeah. And they're telling us that people still think that the insurance company is responsible for it. People think if they're underinsured that the insurance company is responsible for it. That is not the fact. So how do we tell these people that's what it should be? But
the major insurers understood there was a bit of a problem. So what were the valuers doing at that stage? Were they consulting with them with regards to some short valuations and values?
I never came across any valuers down there when I was working. I did in one case. I sat in a negotiation with a client for a big insurer. And the valuer was telling me his value, and I asked him to prove his value, and he's like, well, I just used this square metre rate. And I said, well, here's the value that I've got. Because commercial guys have always had a sum insured.
Yeah.
That's the difference. So they always had a sum insured. So if they insured it for they had to get it's a bit valuers clipped it onto their market valuation. I said, we'll just do it for a couple $100 a file. So it's easy money for them.
Yeah.
And then they would phone people like us and get the square metre rate and say, how much was that building in the square metre rate, and just add an inflationary figure on it, which we see now as an issue because they add on and add it on, and it could be 10 years since it had a proper valuation, or 10 years since it was built, and they've added inflation on inflation, and it just magnifies and becomes a huge issue.
Yeah.
So with them being involved down there, I've seen them involved in lots of. I've seen a lot of the reports and was asked to comment on them at the time, but the most important thing was getting money out to people and get people paid.
Yeah, get the claims sorted.
Most people, we were pushing them to get rebuilds, and just take the money and rebuild it yourself.
Yeah.
For the commercial guys, it was a tough time.
Yeah, it was tens of thousands of jobs as well that you essentially working on.
We worked on residential jobs. I think we worked on about 30,000 jobs as a team, as CCC.
Yeah.
Commercial, I think we were on about 15,000 commercial jobs.
Yeah.
It's a huge contract.
Yeah.
Huge. And it was, mentally it was draining. Because you're dealing with people, personal stuff's really hard to deal with people. And you're going to people's houses, and one that sticks in my head is going to an old woman's house that she couldn't get out of her house because her footpath was damaged, and they wouldn't put her on the list to make sure that she would get done right away. She couldn't leave the house.
Yeah.
So I pushed her onto the list to make sure that she was a priority to get this driveway, and I got kicked for it. And I'm saying, well, she is a priority. She can't get out of the house. She's stuck in her house. So there's lots of things, stories. I'm sure everybody at work down there has got a story. It was lots of things that, when I think about it, there's lots of things that conjure up good and bad memories.
Everything that we've built on top of that, that experience, be it good or bad, we've managed to take all those rates and all that data and create some processes and systems to ensure that we're a lot more nimble when these things happen again, if and when they happen again, and puts us in good stead to be able to deal with it and deal with the capacity and high volume.
Yeah, the high volume thing doesn't worry us anymore. 30,000 jobs and 15,000 jobs is a lot of jobs, but that was over a space of 3 years or something that we worked down there.
That's right.
But we could do that now easily. We could do that in a year easily.
Yeah.
Even quicker.
Yeah.
When we first started doing this, it would take 12 hours to do a report. sort of from, I know.
Yeah.
And our prices reflected it.
Yeah.
So we didn't get a lot of work, but now we're charging $600.
Yeah.
And the work shows that, but we're down at 2 hours.
Yeah.
So that was the big change, and technology's really strided along for us and helped us do that.
And back then, it was basically dealing with it after the event, where ultimately, if they've got armed with one of our reports before it happens,
Yeah.
then it's an absolute no-brainer.
I think if it happened now, and we lived in a cul-de-sac, and everybody had a report, a proper QS report done, you could take them together and go to a builder, and a builder would take the contract.
Yep.
And that would clear up a lot of it. Whereas then, everybody had different, it was all different, and nobody knew how much houses were going to be, so you were having to get quote for every single house to get it rebuilt.
Yeah.
The amount of photographs that we're taking now, the amount of information that we've got, that we don't hand out to people that sits, because nobody needs all that information, that we have to hand would be so much easier. That some of the insurance companies, when they have a claim, they'll come and ask us for the full report, because we've got 50 odd photographs in it, or we've got all that information in the background. We've got more information than the people that live in it.
I can't believe we've actually talked this long together without arguing and having
Well, I know married couple.
the finishing each other's sentences and God. Yes. Anyway, good.
Yeah, thank you.